Guys, welcome back to my channel Accounts Accuracy, and let's continue issue of debentures. As you know, issue of debentures are done to the general public, but sometimes it is also issued for consideration other than cash. Suppose if company has to pay cash to its promoters, to its underwriters, to its vendors, in place of paying cash, company tries to issue debentures. Now, if the company issues debentures to its promoters just for promotion of the company, and that is called as incorporation cost, so journal will be incorporation cost to promoters account. In the same way, when company issues debentures to the underwriters, then company writes underwriters commission to underwriters. In the same way, when company issues debentures to its vendors. Vendors are those people from which company purchase either some assets or the entire business of other company. So at that time what happens, when company issues debentures for purchasing the assets, and then the journal is debit what comes in, sundry assets will get in the company, and two debentures by credit what goes out, so debentures will be credited. And if company purchases the entire business of the vendor, that means entire company, then at that time what happens, company gets assets as well as liabilities. So as you know, assets should be debited and liabilities should be always credited. As per modern rule, it should always be debited and this should always be credited. Now you have to debit all the assets and you need to credit all the liabilities. And after doing that, you are also supposed to pay the amount to the vendor. So that in place of paying cash to the vendor, the debentures are issued. And what we write? To vendors. The amount which vendors are supposed to get for the purchase of the business. Now you must understand it better with the example. Here you can see the company is issuing debentures for consideration other than cash. And here what is happening, company is going to purchase the other company. When company purchases the other company, and for that company issues debentures, what is the entry? Assets we debit as per modern rule and liabilities we always credit. But here let's see, if the company purchases entire business of another company, company acquires assets as well as liability of that company. Now when company acquires assets as well as liability, all the assets get debited and all the liabilities get credited. After that, the amount which is required to be paid to the vendors, that also get credited. After debiting all the assets and crediting all the liabilities and the amount paid to the vendors, still there remains the difference in the amount of debit total and credit total. Now that difference between debit and credit total will be the balancing figure. Now that balancing figure, that means that deficit will be written as goodwill account. If your debit side will be less with some amount, then that amount will be written as goodwill account. Let's understand it better with this example. Radha Limited took over assets of rupees 7 lakh and liability 60,000. So total of assets value is 7 lakh. That means sundry assets will get debited with 7 lakh. All the assets we debit as per this journal, and liabilities you need to credit. That means 60,000 will be credited over here. Again, CR Limited, for a consideration of 6,60,000, it paid the purchase consideration by issuing of rupees 100 each at 10% premium. Now the total amount which is required to be paid to the CR Limited, from which Radha Limited purchased the entire firm, will be paid 6,60,000 in total. Now you need to find out that how much amount of debentures which will be issued to the CR Limited for purchasing the entire business. If you need to find out the number of debentures, what we need to do? Purchase consideration by issue price of debenture. In the question, purchase consideration is given 6,60,000 and the issue price of debenture is given 110. Why? 100 rupees is the price of debenture and 10 rupees is the security premium reserve value. So here in this what we are noticing that purchase consideration is 6,60,000. So this amount would be paid to the vendor, that is 6,60,000 to vendor, and that too by 6,60,000. So total of your credit side is coming out as 7,20,000, but at the debit side what we have done, we have only debited it with 7 lakh. So the balancing figure will be 20,000. The difference between 7,20,000 and 7 lakh is 20,000. So this will be written as goodwill account. Again, total amount will be paid to CR Limited, and that will be CR Limited account to 9% debenture account to securities premium reserve account. 6 lakh will be issued as debenture and rest 60,000, that is 10% premium will be given as 60,000, and we just calculated that 6,000 debentures will be issued. So 6,000 debentures into rupees 100, this will be the value of 9% debentures which will be issued to Share Limited, and 6,000 into rupees 10, that is 10% of 100 rupees, that is rupees 10 will be 60,000, and this amount will be written as to securities premium reserve account. So this is how you will be able to do this kind of question. Now next, just see, as we saw that debit side balancing figure is written as goodwill account. Now what happens when the debit side will be more and credit side total will be less? Then in that case the balancing figure of credit side will be written as capital reserve. The difference is credited as capital reserve account. Just the same question it is, but here only one difference I have done, that the deficiency will occur at credit side. You can see here Radha Limited took over assets of 7 lakh. So 7 lakh will be debited, liabilities of 60,000. So 60,000 will be credited as to sundry liabilities. Now CR Limited for a consideration of 5,61,000. So two vendors 5,61,000 will be due, and then the balancing figure would be written as capital reserve, that is 79,000. So what we are noticing, 7 lakh is at debit side and credit side is just 6,21,000. So the difference, that is 79,000, will be the capital reserve, and that balancing figure we will write as 2 capital reserve 79,000. Here we need to find out the total number of debentures to be issued by the company for the purchase consideration. So the number of debentures which will be issued, the company will be purchase consideration, that is 5,61,000, divided by the issue price of debenture, that is 100 plus 10. 100 rupees debenture value and 10 rupees premium value. So that will be divided with 110, and the amount which will come out will be 5,100. So this is the number of debentures which will be issued. As the company will issue 5,100 debentures, so the amount which will be written with 9% debenture will be 5,100 into 100, that is 5,10,000. In the same way, for securities premium reserve, we need to multiply 5,100 debenture with rupees 10. That is premium value 10% of rupees 100, that is 10 rupees. And that will be 51,000. So this is how you will do this type of sum. And I am telling you, it is very important. You may get it in board exam. So do practice it well. And do watch my next video for understanding rest of the issue of debenture parts. Till then, keep studying and don't forget to subscribe my channel and hit the big fat like button. Share as much as you can. Thanks for watching.